Bitcoin is up 50% since that day in 4 short weeks. So I am wearing the Bitcoin orange pants today. I have the Bitcoin bull sock game going. So the cape and the big green candles. And I'm pretty psyched about, I'm officially declaring 3 weeks from Tuesday, this coming Tuesday, is the official start of crypto summer.
Mark Yusko, an American investor and hedge fund manager, focuses on the seasonality of the crypto market, with winter being a time when crypto asset prices are down and a little bit of reprieve during crypto spring, followed by summer with massive rallies and new all-time highs. Despite Hurricane Sam bringing unwanted attention to the global digital assets industry, Yusko predicts that the cryptocurrency market is finally transitioning into summer. He attributes the recent rally in the crypto and stocks markets primarily to a burst of liquidity from the world's major central banks, with the People's Bank of China injecting liquidity directly into its banking system. According to Yusko, these large waves of global liquidity are currently driving markets higher, while more significant rallies are expected next year. Yusko also shares his outlook on the current state of the U.S. economy and what investors can expect from here on.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Sellers are gone. All the big leveraged bad guys are gone. And it turns out that I just did a presentation on this yesterday. Hash rate, new all-time high. Number of wallets, new all-time high. Number of wallets with greater than 0.1 Bitcoin, new all-time high. Transaction size and volume, not all-time high, but coming back to being close. Of my presentation yesterday was, crypto summer, surfing on a wave of global liquidity. China printed $1 trillion since October, trillion with a T. Japan, another couple hundred billion. The Fed put $300 billion back on their balance sheet. So, we've got $1.5 trillion of liquidity sloshing around, and turns out people buy things that they like. And there's a whole bunch of people that like crypto, and Bitcoin and ETH are the biggest beneficiaries. Yeah. The data is there's more buyers than sellers of ETH. ETH, I think I have this right, over the past couple weeks has even outperformed BTC. I mean, it was up 5% yesterday. It crashed through 2000 and hit 2100 very quickly. So I kind of come down on the latter part of your analysis to say, yes, there's a legitimate fear that, people would unlock or de-risk some portion of what they've been staking. But I kind of come to it as there's no evidence of that, right? There's just no evidence in the markets of big liquidations of really anything. And there's some lower level coins that have just been going batshit crazy. It's tough to maintain optimism and energy in the face of constant beatings, right? The whole line, the beatings will continue until morale improves. Well, morale ain't going to improve. I mean, you beat people down and they will sink lower and lower. And it was a summer of beatings last summer, or fall. It was a fall of beatings. And, bad people doing bad things, and then government actors doing bad things. And suddenly there's this reprieve. Now, look, I do think it's the calm before the storm. I don't think that then they fight you phase is over. I think it's going to come back with us. Ms. Warren is assembling her crypto army.
As the United States approaches a major election year, it's becoming increasingly clear that politicians are using the cryptocurrency industry as a political tool. Last month, Florida Governor Ron DeSantis proposed legislation to ban the use of a federally controlled CBDC in the state. Similarly, Republican Senator Ted Cruz introduced a bill to prohibit the Federal Reserve from creating a direct-to-consumer CBDC, claiming it could be used for financial surveillance. Democratic Senator Elizabeth Warren has also raised concerns about crypto and is rallying against it. According to Mark Yusko, This political posturing shows that the industry is still in a confrontational phase and that energy would be better spent on other areas of the economy. Let's return to the interview for Yusko's thoughts on the U.S. economy in the near future.
I think the economy is slowish. I think first quarter number is going to disappoint. Fourth quarter number got revised down. Still not horrible. And the last year, even though they're not going to call it, was a recession. It was a mild recession. 1% year over year, 0.9 year over year GDP. That's recession. That's a 2001-esque recession. And I think in the absence of the global wave of liquidity, right? Had China not printed $1 trillion, had, Kuroda-san as his, going away president, not printed another 200 billion, had the Fed not stepped in with Silicon Valley at all with this BTFP, I would be more negative on growth. I would say, negative GDP growth in Q1. I would say negative GDP growth in Q2. I don't see that, right? I see a one handle in Q1. The biggest indicator is the 10-year. The 10-year yield has collapsed, right? It's down from 4 something to 3.4, something like that. And that's telling you that growth is decelerating, not accelerating. Yet, if you look at Chinese liquidity provision forwarded 6 months and PMIs, it would tell us that PMIs have troughed and that economic activity is going to rise, albeit slowly. But so I think we're going to avert the hard crash landing. This idea of no landing, I think that's just a silly idea. There'll be a landing. I think you see it in activity, right? I went to a restaurant with the family the other night, and it was bustling. It wasn't slammed, but it was bustling. And again, this is a nice restaurant in, we don't have very many super nice restaurants in Chapel Hill, but we have a couple of nice restaurants. And it was full, and that's a good indicator. The airport over spring break slammed. A lot of people traveling for spring break. But so to answer your question, where are we in the business cycle? I think we're past the trough. I think we troughed, middle of last year, third quarter or something like that. We kind of fudged the numbers with the SPR, right? We would have had much worse GDP prints last year if we hadn't drained the SPR and double counted the oil. I think that's a scam, but people believe it. If they start reversing that and start putting oil back in, that could juice that could hurt the numbers the other way. But I don't know. We'll see. If you look at the last 20 years, okay, all of the increase in equity is the Fed balance sheet. 100% of it. 100% of it. And so when equities rolled over last year because they tried the QT thing, what did they do globally? Turned it back on. The QE is back on, and we are back to QE infinity. And because you have to, right? You can't have this entitlement program. And this is everywhere. This is Western Europe, Japan, US, all have the same problem. Aging population that's been promised all this stuff. You put their money into these passive 401ks, 403bs, and you cannot have a situation where the value goes down and they have to cover it. They don't have the money. There's no savings. Savings rate is plummeted. It's plumbing new all-time lows.
Mark Yusko believes that not only the cryptocurrency markets, but also the overall U.S. economy is undergoing a shift. He thinks that the global liquidity wave will continue to support the markets, as long as the Federal Reserve avoids a hard landing. Despite the central bank's not-so-stellar track record, Yusko still has faith in their abilities. However, many American investors may have lost respect for the Federal Reserve due to their reluctance to make appropriate moves. What do you think about Yusko's assessment? Do you believe that the crypto industry and the US economy are transitioning from spring to summer? Feel free to share your thoughts in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.